Welcome everyone to Dunelm Mail. Sorry, I had to. I was debating it because that is so catchy and it's stuck in my head all these years. So it was a really, really good jingle, I must say. I imagine most of the UK is very familiar with that radio ad or TV ad for the Dunelm Group. Now, who are they? They are a retailer in British home furnishings, and by home furnishings, they're probably one of the best. I must admit, I've been in Dunelm. I'm a frequent customer because my mother loves going to Dunelm. Shout out to Mo. And to be honest, for quality and value, the stuff they have, it's so unique. It would be very difficult to find a shop that would be entirely the same. Consider most of Dunelm's brands are actually in-house. That is their own stuff. They're not, a lot of the stuff they supply is theirs. They source it from their own suppliers, and it's brilliant. So they're a dividend pair, so obviously they're going to be on the list here. Ticker symbol DNLM on the London Stock Exchange. Company are headquartered in Syston, England, and they have their own factories for curtains, blinds, accessories based in Leicestershire. I don't know why why that was so hard to pronounce. Anywho, we're going to have a look here. Their dividend yield is a modest 4.88%. Was it always so? Has it been consistent? That's the questions we got to ask, and I'm hopefully going to answer for you. Now, in the last year, you might go, "Oh, Tom, that's a bit rough." Minus 44% from a high of almost £15. Currently trading at 717 pence, £7.17. And yeah, so they're down 50%, not looking good. Does the 5-year tell a different story? Kind of does. So back here in 2018, they were trading for about £5. They rose all the way to the tip top of nearly £14 in February. A certain global pandemic hits, they plummet down to £7, which they're still trading at. Now, a lot of the companies recovered, and Dunelm was no exception, recovering quite nicely, and hitting a near all-time high of £15. Then they started to have a bit of a decline recently. We're going to see if there's any reasoning for that, and what the future holds for Dunelm Group. They have 11,000 employees and revenue of 1.3 billion. Founded in 1979. Okay, right. I think we have enough to go on this. Time to pop on over, but we'll hit the max. How were they doing in the past? 2013. Okay. So share prices are as low as it was during the worst part of the pandemic, when the stock prices collapsed. Now, for anyone that doesn't know, I wanted to show you Dunelm's website. What do they provide? Well, everything, furniture for your bedroom, the bedding, curtains. I actually my duvet, my bed sheets, everything I have is actually from Dunelm. So, customer here, I know that it is a pretty decent business, and I appreciate that the value for money was there, and a few of their own brands, and just the stuff you can buy there. As I said, I was ranting about it earlier. Some of it's really unique, from their decorations, and they do storage, bath, kitchen, rugs, decor. Look at the amount. It's the vastness of what they provide under one roof. And I would say the store isn't that big. In square footage, it's not big compared to a lot of the other stores nearby. The variety and the stuff they fit in under one roof, it is impressive. And Christmas is coming. Now, will people be spending as much? As you know, we are kind of dipping into a recession. It's not officially stated just yet, but everyone predicts it. And if anyone's seen, energy prices and everything else, it mightn't be the biggest spend of a Christmas ever, for good reason. Maybe with a new Prime Minister coming in, maybe with there might be peace in the eastern side of Europe. All good things that hopefully will contribute to, a bit of a better economic outturn. And Dunelm is obviously going to suffer if people don't go out to spend much, and that's just the reality of retail. We're going to pop on over to their investor side here. Let's see if Dunelm can convince us with their investment proposition. So they're well positioned with a clear runway for growth. Okay, their growth apparently is pretty good. We'll see that in Simply Wall Street, see if that stacks up. Brand purpose. Now, their brand's obviously quite unique. Like a lot of large retailers like this, there's mums, grannies, parents, lots of people that they just solely go to Dunelm because they believe it's good value for money, and that's just the way it is. So they probably do have a pretty strong following in that sense. Distinctive and specialist products, offering quality value. Yep, as if I was reading off the hymn sheet itself. Here it is, product proposition. Total retail system. Combines the advantages of digital and local shopping. So I've been dabbling into the digital. You can order stuff and, go and pick it up and a few other things. That's good. That I'm impressed to see, and I'm glad to see, because to be honest, if you don't stick into the retail side of things, a lot of these retailers will not survive into the future unless they adapt. Good to see. Financial position. They're a highly cash generative business and a strong balance sheet and agility. Gonna check that out in Simply Wall Street. Shared values and then future growth. Okay, anything else that you can maybe give us over here? Presentations and whatnot. Well, we'll probably go over and just find all that out for ourselves. Yep. Store locator. Does it give me a map? I like maps. Show me a map. 69. I'm a child. Let's see. Okay, so the 5 in Northern Ireland, 11 up in sort of Scotland direction. Most prominent seems to be in the sort of Manchester, Liverpool area in the north. I don't know why this is refusing to. Why it keeps zooming me out? I'm not sure. I'm gonna see. Can I do it like this? Nope, keeps throwing me out. Anyway, as you can tell, they must have about 150, 200 stores. Seems about right. That's not too bad. Pretty good coverage across the UK. I don't know if that one there is somewhere in France. Oh no, it's in Jersey. They have one in Jersey? There we go. The more you know. Okay, on the Simply Wall Street website that I use for quite a lot of my screening, you do, on the free account, you can check out 5 free stocks per month. It's not an affiliate link. If I do have one, it'll be in a pinned comment. At the moment, I'm just a regular user of it. I've bought the full play, the unlimited plan, to deliver as best and as much content to you as possible. They have their wee snowflake here. Now, what it does is it shows you 5 things. The valuation of the company. So as you can see, compared to peers, industry and forecasted cash flows. The future of the company in the next couple of years. Their past performance. Financial health, which as you can see, Dunelm scores 6 out of 6. Pretty good. And dividend, they score 5 out of 6. Okay. So let's see. Top points. Trading at 54% below our fair value. Now it's an estimate, it's not gospel. Don't take that as the real thing. Also, I would highly recommend that it's on a discounted cash flow model, so it might 54% under fair value. Yeah, some companies don't ever go to fair value, so always remember that. Earnings are growing over the past 5 years, and the forecast is for them to decline. Now, the analysts for Simply Wall Street haven't always got things right, as most humans do. So take a lot of this with a pinch of salt. Depends on how the economy and a lot of other factors go, and we'll have to see. Valuation, compared to peers. Who are they going to compare them to? Well, Currys. Really? Is that who we're comparing each other to? Pets at Home? We're comparing ourselves? Okay. Watches of Switzerland and the SCS Group. Okay, weird competitors. I ain't gonna bother with that. We're just gonna scroll on down here to the fair value. Currently trading £7. Fair value is apparently 15 on a discounted cash flow model. If you want to know what that looks like, you can always click this and then let's see. This is the data for it. Yeah, the inputs. It's pretty. There's a lot of formula there. Okay, let's go to future growth. They do not score well. I kind of seen this coming. It sort of depends. As I said, the way the economy, the way people spend and all, into the future, they're meant to grow a bit. Not a lot. Profits aren't even projected to grow that much, but then they might. Again, it's one of those things. We've just got to keep an eye out and see what's happening. I think I overlooked something up here. Yep. Recently, just a board change, CFO change, special dividend given out. That's been it. There's not much else. But stock price continuing to go down. There's a lot of news that Simply Wall Street provides. Always good to have we read into it. In fact, what we'll do is we'll actually read into this one. What is the Dunelm Group's price doing? Okay, so it's received a lot of attention over the last while. It's been dropping the new lows, and it might be, a good opportunity to buy into. Okay, that seems pretty good. What's it worth? This is like a sort of generated one, it seems. Sometimes with a motley investor you can get one. So what I'm going to do is I'm going to pop back into here, and we'll redo that. Going on to past performance, I want to see how they've been doing in the past. Pretty healthy, good revenue, good profit margins, no losses in any year, at least the past 5 years. Financial health, assets to liabilities, not bad, and then long term the same. Very, very close in the liabilities though. Apparently debt equity ratio is pretty good. There we go. They're debt free, apparently. What liabilities do they hold? Account payables, equity. Okay, right. Dead on. Down to the dividend. Now it says 6.41. Obviously, that's based entirely off of their current stock value. That's it. They're pretty high compared to the market, even the industry average. They were growing year on year. They're kind of an explosive growth. They were sort of around the 2 to 3%. Now, it's been inflated because the stock price has went down to 6.4%. They didn't pay out in 2020. A lot of retailers, obviously, due to the pandemic, didn't. That's kind of a normal thing to see, I suppose. For some people, I do like most of the companies in my portfolio never stopped paying, even through the pandemic. If you can forgive the fact that a lot of the retailers did close their doors for near enough, 6 months, 6 months in some cases, maybe to a year, before they recovered. Yeah, maybe retaining the cash flow was a good business decision. And we'll see what happens into the next few years. We've got plenty on our plate to deal with. Cash paid to shareholders is still just 54%. That's good. Well covered. Okay. Right. What are we going to look at next? Dividend Max. Perfect. Dunelm Group. As you can see here, for anyone new, I always like just point out what's going on here. Next dividend is expected to go X in 2 months. The X date is the date you must own the share a day before in order to be entitled to the dividend payment, which is then paid on the pay date. Declaration date, just the date to say this is what we're doing, this is when it's being paid, this is the X dividend. More importantly, this is what we're paying on that particular one. They typically pay 2 times per year, an interim and a final. Sometimes the interim's less and the final's more, and then special ones can occur, which we're about to see. Dividend yields was actually growing year on year for Dunelm all the way to 2019, obviously stopping in 2020, but fully recovering and exploding in 2021. Is that a good trend? It is indeed. However, again, it's a hard call, because we don't know what the future holds in the next couple of months with the oncoming recession, a few other things. Will people be spending as much at Christmas? It's a company that will be on my watch list into next year for sure, though. As you can see, they were paying out some special dividends, and they seem to have consistently done that near enough for the past 3 years, barring 2020. So 2022, 2021, and 2019. They were enjoying quite the explosion of cash flow. Okay, on to one of my favourite websites, my own brokerage, Trading 212. There's an affiliate link in the description if anyone wants to grab themselves a free share up to £100, and I get one, of course, as well. Just to throw that out there. Why not plug it in the middle of this? Let's see here. We have a bit of a description they'll provide for you. 175 out-of-town superstores. That's I was close enough. Said 150 to 300, so pretty good. Want to see their cash flow. Here it is. Operating cash flow about 184 million. Pretty good. Okay, pretty good. What are the payout in dividends and just overall cash? Always interesting to see. 24 million in dividends. Okay, not too bad. Definitely are a very a good cash flow business. I can always appreciate that. But yeah, that is the Dunelm Group. Look through, you know exactly who they are, history, year, everything I can give you is balance sheets. We've looked at quite a few things. Been quite entertaining. I've enjoyed it. Now, let me know in the comments section on the other companies you would like to see. And what do you think of the Dunelm Group? Is it a stock that you have in your own portfolio? Would you add it? Would you buy into it? Would you sell it? Let me know what you think in the comment section below. Always love to have a good discussion with you. And thank you, and I'll see you all in the next episode. Bye-bye.